Alicia has been a member of the group since, let's see, or up here at the bottom here, since January 25th, 2011. So you're on your, 5-year anniversary.
Yeah.
So that's pretty exciting.
Yeah.
So it's been a long time.
Pay your dues.
Alicia
Right, we'll hunt you down.
has also done a lot of transition through the group, working for a firm and then going out on her own and building her own business. She is the tax whisperer, fantastic at tax and all things accounting. So let us give Alicia our undivided attention. Take it away.
Thank you. Good morning. I am Alicia Utley with Infinite Tax Solutions. We're a small firm here in Boulder, though growing rapidly. I have 3 employees right now. We'll probably add 1 or 2 more within the year. So one thing that we really focus on is helping to start, build, or improve your existing business. And most of us assume that a business just means a separate entity that you're running independently. Maybe you have employees, maybe you have an office space or a retail location. But there are other things that also play into the same genre and mindset as being self-employed, and that would be if you have rental properties, if you're managing a trust, if you are part of a partnership, or even just managing personal finances. You have to treat all of this like it's a separate autonomous business. So I've passed around a little fact sheet and tip sheet that I put together for us. And one of the things that is really the best way to do your business is to start it correctly going from the beginning. So surround yourself with the right tax professionals, business professionals, coaches, insurance agents. Let's see, I put a whole list on here. Basically, the people that are in this room should be your network of people to go to help start, grow, and maintain your business. So we have, Brent here who's in banking. We've got Kimberly in banking. Those should be your resources here. Insurance agents, so we've got Dave and Steve also, where are you, Steve? Offers insurance. Reach out to your attorneys in the group. Dan for finance. Steve also does some finance. And business coaching. I don't think we have any coaches in the group right now, but oh, sorry. I apologize. I'm very nervous right now. So what we do is not just taxes. We help assemble you with the right group of people to make sure that your business thrives. So one thing that we really emphasize is maintaining good record keeping. And we have some people that will show up with a box of papers, and we have some people that have everything in QuickBooks, and we will deal with everybody throughout that spectrum. But we will coach you on ways to better maintain those records in a way that will be presentable to the IRS in the case of an audit, or to the state of Colorado also in case of an audit. We do help train some different types of software, including QuickBooks. That is hands down my favorite software to use. They have an online application as well as a desktop. Another thing that we help a lot of our clients with is payroll. Try not to do much payroll in-house. We will if you're a small S-Corp and you only have a couple payrolls a year, but we will outsource those services usually to a payroll provider like Derek's company or some other ones that we have good relationships with. And also help you understand the ramifications of having employees within your business, whether that's benefits, insurance, making sure that you're compliant with the Affordable Care Act, disability insurance for them if necessary, and we will connect you with all of those providers. Similar to what this group does for all of us, we do that in-house within our firm and use the people within this group as our referral network. And another thing that is also very important when you're a small business owner is thinking about retirement. It usually gets lost when you're focused mostly on just building, making money. And one thing that we like to do is sit down and talk to you about deferring your income to a later point in life. And we use a couple tools, and Dan is one of my preferred financial planners to really plan things out for you and build the best plan that fits you and your business. So, one of my focus areas, and one thing that I'm very passionate about, is getting people back into the system. Pretty well known for that here in Boulder, and also throughout the IRS offices here in Colorado. I do receive several referrals a year directly from the IRS when they have somebody that comes in that is trying to represent themselves and needs a little bit of extra help. So, worked really hard to maintain good relationships with all the taxing authorities and make sure that I'm up to speed on everything that's coming down the pipeline. So that's enough about me and my business. Are there any tax questions that I can answer for any of you as small business owners? Go ahead, Maddie.
Let's say you have someone in your office, you're self-employed, or you're, I don't know the correct terminology, sole proprietor,
Okay.
for example, and they come in and they do work for you in the office. They're not a full-time employee, but they'll do work for you, and then at the end of the month, you write them a check
Okay.
for the work that they did.
All right.
Now, paying them that way, is that going to incur any penalties?
It would not. However, one thing that I would talk to you about is the difference between an employee and a contractor, and whether that person actually fits the mold to be a contractor. And if they do, we'd have you send them correct paperwork, which would be a W-9, possibly an independent contractor agreement, depending on how gray the area is in your relationship with them, and make sure that you're giving them a 1099 at the end of the year.
Okay.
So, yeah. Dave.
First of all, just to comment to anyone, that if you ever have to go before the IRS, don't go by yourself.
Ever.
Go
We
with
won't let
Alicia.
you go. We show up in place of you so
Yes.
that you don't say something that's going to hurt you.
I've been fortunate enough that I've never had to go before, but if I ever am called, Alicia's going to go for me.
And we do not just IRS audits. So deal with state of Colorado, deal with sales tax, and even unemployment insurance audits. SUTA and FUTA are taxes. Therefore, that falls under the realm of tax, and I also defend those audits.
And then my question is on the personal side of it. A young man's 20 years old, he's in college.
Okay?
He gets student aid.
Okay?
His parents are claiming his exemption.
Okay.
He's claiming himself as single. Can the mother take his financial aid, whatever it is, that form he gets, and process that on her return, or does that have to be on his return?
So when you are claiming a child as a dependent and they are in college, their 1098-T, which is the college expense form, gets reported on the return for who's claiming the exemption. So if you as a parent are claiming the exemption, then those expenses go on your return. If the child is independent and truly independent, paying more than 50% of their living costs, then they would claim themselves. The parents would not claim them, and they would claim their own college expenses. So in that case, the parents would claim it. Okay, Mike?
If I change from being a partner, sole entrepreneur,
Sole
sole
proprietor.
proprietor, and switch to an LLC or something, are there any tax advantages, or is it all about just not being sued?
Moving from a sole prop to an LLC has everything to do with liability. And if it's a single member LLC, it will look virtually the same on your taxes. If you have a two-member LLC, then it goes onto a separate tax return. It's a partnership tax return. And there are some things that we can do with that to reduce your taxes. Same with putting you into an S Corp or converting you from an LLC to being taxed as an S Corp. We can do some things to reduce taxes that way.
Is it complicated, or can you help me with that?
It is slightly more complicated than being a sole proprietor. There are more administrative costs involved. So we would look at what the costs are compared to the benefits and see if there's a break-even point there and whether you've exceeded that.
Okay.
Okay? Yes.
Why would a business be an LLC treated as an S-corp versus an S-corp?
Because a lot of times, okay, so when you're starting a new business, you're usually in the red for a couple of years. And you're gonna see the most benefit when you are an LLC in that respect. There are other things that you can do with an LLC, such as home office, that you can't do very easily when you have an S-corp. There are more administrative costs associated with an S-corp, and you must do payroll when you are an S-corp. So what we'll typically do is start somebody off in an LLC, and then once they reach a certain threshold where their profit exceeds reasonable compensation by a certain delta, then we will convert them over to an S-corp. So we'll help you grow as your business grows. I'll just keep going around the table. Kate?
Can you explain the difference between an enrolled agent and a CPA and kind of who you are?
She stole my question.
So you wrote it down, she saw it.
So the people that know me in here, I am an enrolled agent. The biggest difference is that my license comes from the federal government, which makes it so that I'm licensed in every single state. A CPA is licensed by the state, and if they want to work in another state, they must get licensed in that state, much like an attorney. So I did it all in one shot, got licensed by the feds, and so I can work with clients anywhere. And I even have clients abroad. I have clients in Qatar, in Cambridge, in London, in South Africa, New Zealand, and Australia. Yeah, that's the biggest difference. Brent, she got you? Okay. Anybody else? Michelle? I know, God, I just keep looking past you. No, sorry.
I'll wear a brighter shirt next time.
No black tie.
It's not intentional. I'm sorry. I'm sorry.
So, in terms of like the habit of actually, I feel like I, like most people, sometimes turn around and go, oh, shoot, taxes on the trucking or whatnot. Like keeping everything, but not as bad as the box of things. But at the same time, what would you suggest? Example, recording miles. What have you found that you suggest best for people to habitually record things so they don't turn around and they've got 9 months to do 9 months when there could have been another game plan?
So for somebody in your realm where it's just you, and there's not a big company, I would get on to QuickBooks Self-Employed and just every month go in and update it and pull reports, see how your business is doing. You can put your mileage in there, or you could use, there are dozens of apps on your phone that you can download that will keep track of your mileage for you. Hit the button, I'm leaving, I'm going to a meeting, hit the button, I've shown up. And it's very easy to use. Other people like the mileage logs. I have stacks and stacks of those in my office if anybody needs those. Also Excel spreadsheets work very well. It's a good tool.
Another good way is you look at what you did last year and you say, just raise that a little bit.
Keith just, his has been 16,000 miles in the last 20 years.
It's not what everybody else does.
Right?
About 6,000 in restaurants last year, about 6,300.
And honestly, as long as you are within reason on your mileage, it's probably not going to be something that is scrutinized.
I know someone who got audited in our company, they just did Google Maps and just did it that way to make sure that it was completely accurate, even though it took a really long time.
Yeah.
So,
One of the apps is called Mile IQ, and I use it. It's always running in the background. It's not a battery, so it records every drive. I got credit for riding in Keith's car to lunch one day. So
He's like, I'm
I
checking
moved
in.
it to the personal category instead of in this category. But
All right, well, let's,
Remember, everybody in this room, with the exception of I think 1 or 2 people who are W-2 employees, everybody else here is self-employed. And remember that throughout the day, whatever you are doing, you're promoting your business. So with that in mind, everywhere you drive, with the exception of the grocery store and picking up your kids, should be in the pursuit of building and maintaining your business. Keep that in mind. Always working. Yes.
Alicia, can you just enlighten us on some of the red flags that IRS will pick up
Well,
And
let's see.
we have about 20 seconds.
Okay, so one of the big flags would be, in the realm of mileage. If you're claiming 40,000 miles a year for your dog grooming business, and you have a physical location outside of your home, that's not going to really work. Things would be, extensive amounts of travel if you're a realtor. Meals and entertainment, if it's more than 10% of your gross receipts, that's going to be a red flag. And that's something that we watch when we prepare returns, is if you're too loaded in one category that's going to be outside of the norm for your industry, we're going to help break that up a little bit.
How about business at home?
Business at home is no longer a red flag.
Hey, good.
Yeah. So many people are working from home now that it's just the new norm.
All right, well,
How long can they go back to audit a return?
3 years from either the date of filing or the date that it was due, whichever is later. So if you filed it in March, but it was due April 15th, then it's 3 years from April 15th when it was originally due. So while they say you should keep your returns for 7 years, really they can only go back 3 years unless they have cause to do so. And if they get within 6 months of the end of your statute of limitations, they can't audit you anymore anyway. So really it's like 2.5 years.
well, thank you very much, Alicia.
Quick trivia, there are 2 things that every person in this room has in common with one another. What are those 2 things?
Death in Texas.
You can't get 2. Did you get 1? Let me come up with another one.
Social security card
Yeah,
number.
That is true.
That's
Okay.
3.
yeah.
We all have a social security number.
All right, thank you very much, excellent.